Hi everyone and welcome to the weekly update with me, Richard Berry, market analyst at Tech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, again we're now looking out towards this US presidential election, and we're also looking forward towards the potential year-end rate hike from the FOMC. Now, I think these two big key risk events could be now starting to factor into these markets. You're starting to see consolidation playing out, and also you're seeing a bit of a safe haven move as well. You're seeing the gold price starting to find support. You're seeing the yen starting to sort of perform much better against the dollar, and also treasury yields have come off the top. So it is interesting that we're seeing these sort of moves coming. Obviously, if the Fed does move to hike interest rates, then that would theoretically start to pull treasury yields higher again. So I think it could just be a near-term move on that market, but certainly I think with gold and the yen, it's an interesting move that we're seeing. Now, this is impacting, I think, also across the equity markets. Aside from the DAX, we're seeing, broadly speaking, markets sort of consolidating now, and it's interesting that Forex markets, again, other than the moves that we've seen on the euro, similar sort of situation. So this week we're going to see key growth data for the States and the UK. Certainly the UK will be giving out indications of how the UK economy is performing post-Brexit, and also the US economy in Q3. So that's what we've got to look forward to. Now, in terms of your FX markets, we've got the euro, as I said, which has been under pressure recently, falling away. Still looks like it's going to be pulling back towards that 108 big figure mark, having broken below 109.50. In terms of your cable rate, it's actually sort of starting to consolidate a little bit. The constant talk about hard Brexit seems to be sort of no longer so much of a feature, and markets are starting to sort of trade a little bit more sideways, a little bit more of a range play there, and a similar sort of move on the dollar yen as well. That actually been sort of trading sideways for the last couple of weeks between 102.80, 104.60. In terms of other markets, you're actually seeing that little bit of dollar strength, which is pulling higher on the dollar, on the Swissy, and also we're seeing the dollar Canadian loonie breaking out to the upside. So there are still moves that we're seeing on these Forex markets, but you are seeing several moves that are basically just still going sideways. Now, in terms of your equity markets, we've seen the DAX, which is putting pressure on the key resistance levels. That is generally seen as a positive, but outside the DAX, I think the markets are fairly settled. You're seeing FTSE, which is really struggling at the moment, not really going anywhere. S&P 500, we're in the middle of earnings season. We've had a strong start to earnings season as well, but we're not really seeing a great deal of traction. I think that's got a certain amount of issue to do with the presidential election, which markets are still sort of got in the back of their minds as a bit of a risk factor, and I think the S&P 500 not pulling higher. Also, the FOMC meeting, if that in December, if that goes out for a rate hike, then again equities could struggle. So we're seeing equity markets a little bit of a sort of a mixed performance across those key markets, but the S&P 500 is not pulling higher. Again, the oil price, which is one of the obviously the commodity plays that markets are looking out for, but the oil price, which has sort of gone sideways in the last couple of weeks, is now starting to sort of factor into these equity markets as well. So that is a key move. Gold price, as I said earlier, is actually starting to sort of find a bit of support. You've got demand through the festivals from India and also China, and we're seeing a little bit of support coming back in, but whether it actually starts to engage a serious rally or not remains to be seen. So lots of interesting moves potentially on these markets in the coming weeks. Now, in terms of what we've got to look forward to this week, we've got the German EFO expectations, we've got consumer confidence for the States, a lot of US data this week, consumer confidence. We're looking out for US consumer confidence, which had a really strong month last month, likely to pull back a little bit this time out, but still a decent number nonetheless. Moving into the back end of this week, I think the market will certainly be looking out for UK Q3 GDP. That first number, that first clean quarter following on from the Brexit vote, what will the impact be there? You've had some strong retail numbers, although maybe last month wasn't as strong as previously. We're still seeing some nice moves, nice strength on the retail sales data there, and it'll be interesting to see how the UK GDP can hold up on the back of that. But generally speaking, the market will be looking out for the big risk event of the week, which will be the US GDP, and again it will be interesting to see, because the Atlanta Fed is forecasting around about 2% on that GDP number. Will it be the 2.5% that the market is expecting? I'm not quite so sure. So lots to look out for this week. I wish you good luck across all your markets, and I'll speak to you again next time. Thank you.
What did you say?